Welcome to Markets Now. I'm Michelle Rook along with Brad Kooima of Kooima Varilek. Well, we're seeing some pretty good pressure over in the grain trade this morning. Livestock futures, we opened a little bit firmer, but have kind of turned mixed since then. And Brad, let's talk about this cattle market. Of course, we did see live cattle down yesterday, kind of fading the cattle on feed report, which was a little disappointing to some. But we're probably due for a little correction here, aren't we, in this cattle market?
I think we're probably overdue, frankly, for the correction, like you're suggesting. I guess wasn't terribly surprised the market gave back a little bit yesterday, like you had mentioned, coming off of what was a decent cattle on feed report. I would like to mention a little kudos out here to the Feb cattle contract. Finally a February contract that acted like it normally used to seasonally act like. We put a $10 rally together from January into the expiring of the month today, which is kind of exciting. There was a little bit of cash trade around here already yesterday on a Monday at 165, Michelle. And so, you look at Feb cattle at 164.90 and ironically April cattle at 164.90. I certainly don't see that we're, overpriced here by any means. In fact, I think we're very, very fairly priced. I think that there's an interest on the part of the speculator that they would be looking at trying to buy breaks, but it's been so long since we've had a decent correction. And I just feel like maybe the market's maybe due for something like that.
Right. And it is end of the month, Brad. And sometimes that does happen,
Well, I forget. I used to keep a stat. It was ridiculous. It was like 23 out of 24 end of the months we were lower. So I don't know it's quite that bad, but historically that seems to be where the funds want to take some money. And certainly the long funds have had a nice round of profits here this month for sure.
Right. And while they're defending that long position in the livestock, not in the grains, we're also seeing this market pushed here by the fact that the cash market has been strong. And do you anticipate we're going to see another higher cash week this week?
I do. I think steady at the very least of it. Show list numbers, particularly in Texas and across the north here, certainly are not burdensome at all. And the sense that the packer has got himself a little bit closer to the knife. And why wouldn't he, want to kill cattle? Instances here where I know there's a couple of them adding some Saturday hours. Look at the margins. Even with the higher cash, the boxes have been up, nearly $20 in the last 2.5 weeks or so. So, all this threat and rumor about how bad the demand was going to be after the Super Bowl hasn't come to be reality either. So I think the cash market's fine. We may see an inversion here a little bit where we take futures back below cash, which is just fine with me. But I think the cash market, to your question, is going to grind itself higher.
Yeah, and that 165 in Iowa yesterday that you mentioned, hopefully that's a good indication here, at least that we're going to be up for the week. Let's talk about the other fundamentals, though, that have been very strong in this market, including the fact that, we said cash trade up at levels we haven't been since 2015, but that's because we're getting into the tighter supplies and the weights have continued to drop, haven't they?
Very straightforward fundamentals, in my opinion, and fundamentals that we, some of us anyway, were anticipating. I thought that the average weight thing took a little longer to show up than I expected it to, but boy, howdy, are they down now. I mean, you got steer and heifer carcasses well over 20 pounds less than a year ago. And so, you've stayed pulled ahead. The weather has been I know this is airing in Kansas and they probably don't have the same perspective on weather as someone that does where I live, but the weather has been horrible. And for some guys, old guys like me, like one of the top 3 worst winters ever for feeding. Now it's warm and raining. Perfect. These feedlots are a freaking wreck, so I think that the weight thing is around to stay. And as you see these slaughter numbers start to slowly drop, the other thing that it's done in my area is because of the tough weather, I think you've widened the gap between the yearlings and the calves. That's the things that we feed in the north, either basically a yearling or a calf. You try to feed a big calf to get it ready in April. I don't think those big calves have a chance of getting ready in April this year. So I think the numbers, particularly in the north, stay very, very snug through March and April.
So do you think as well that the feeder market continues to crack out these new contract highs? Because we do have the corn market now helping us out.
The corn, for sure, the corn's a big part of that factor. The other thing is, of course, is the mentality of feeder cattle people that feed cattle like me, where you don't want to miss something, right? So the idea that it's going to get better, you've got deferred fat cattle contracts, that are fed cattle for next year is above 170. So, we're all excited to catch this next up cycle. You want to be involved if we get a 2014 like rally, which I believe at some point you're going to in the next 16 to 18 months. So, yeah, optimism, and then the cost of feed coming down a long ways.
Okay.
Maybe a little bit a factor here too, of course, when you've killed cows like we have for 2.5 years, there's going to be less feeder cattle available. That's pretty straightforward. So I would expect that this feeder cattle trade probably stays pretty strong, unless something weird happens, which, we're almost getting used to that, right? But if it's just cattle fundamentals, it looks like they're in pretty solid footing.
Hog market, technically, we had a pretty tough close yesterday, again, below some support areas, but it seems like ever since April became the spot month, we've been dealing with this, the cash trade is not improved, nor the cutouts enough to help us with this stubborn premium that we have had here with the futures to the index. Is that the problem with this market, or what is it?
Yeah, what is it? There's a fundamental problem with that hog futures market, in my opinion. You've got a market that's distanced itself away from what I think are the real fundamentals, and some of the reason they've done that is because they've gone to that cash settlement thing. You've got a contract that only reacts for about 10 minutes every other month to where the real market is, and I think that has spawned a high level of speculation and less volume, and so you're into this more of this volatility. The old saying used to be buy premiums and sell discounts. Well, that sounds good, but I mean, when you carry so much premium in this hog futures market like you have lately, to sustain an up move, you need to have some real news that is good and sustainable. Now, what we hear on pork product is positive. I think that's all right. We'll grind higher, but unless you really advance this cash market somewhere, I think it's still going to be difficult. Now, if you put a gun to my head, I guess usually I would have a tendency to think this hog thing would rally into May. You would think that with cattle price where they were, there'd be a little bit of a magnet effect to maybe draw this pork product and demand up a little bit with it. So, but yes, the market totally lacks follow through to the upside, even though I can argue that it ought to be a little bit better than it does.
Okay. We've done some technical damage now with all this fund selling pressure that we've seen in liquidation over in the grain trade. May soybeans under $15, May corn under $6.50. How much farther do you think we're going to go lower?
It's hard enough just to figure out if you're going up or down, let alone where it's going to go to. I could see the next big level 30 cents down on the old crop corn. Say if you're using July corn like a lot of us are, go take a look at that gap at 601. Now basis continues to stay strong. In fact, it's even a little bit stronger in a couple of the co-ops around here this morning than it was yesterday. So to see an utter collapse there, I guess I don't see it, but don't forget that there's more to the trade than just what cash corn is worth. The speculator, the long funds just can't get through the doorway quick enough. And of course, some of that is influenced by a wholesale collapse over there in the wheat market.
Right.
And then that's, sponsors the selling too. You and I have been on this thing enough times. I would think that if anybody remembers, I've been worried about the bean price for a long time. Brazil's sitting on a record crop and we're up here in the $15 range. So unfortunately, to me, there's a lot of air below this bean thing. Of course, we're going to have to figure out what our own crop looks like here in a couple of months. But I would be on high alert if I was a bean hedger. That's for sure.
Yeah. And it seems like the corn market is also working in this idea that we are going to have a bigger crop this next year and more acres, right?
Right. And the markets there, sometimes we talk about, I don't know what the market's trading. And when I say that, I mean, there's sometimes that the market is intent on some fundamentals, but not others. And for instance, the corn market's been intent on the short crop and the tight basis and the regional imbalance of supply,
right.
And, the strong base. But at some point, and we're there, I believe, the market goes, okay, we've talked about that now for 6 months. What are we going to do here in April, May? And you're absolutely right. The feeling is that you're going to get a lot of acres. You're potentially going to take some acres away from wheat. You're going to get a lot of corn acres because some of the inputs have cheapened up some. So yes, I think the market's starting to look forward to that sort of news and putting the other stuff in the rearview mirror.
Yeah. And I got to believe we're getting some Brazilian harvest pressure in the beans as well on top of all of it. So
100%. And that looks like that crop's a monster, if you can believe what they say.
All right. Thanks so much for joining us, Brad Kooima with Kooima Varilek, and that's Markets Now.